Coming up on Business Incorporated. Intra-Africa Trade Fair kicks off in Durban, South Africa. In Tanzania, regulator imposes 10-year tenure limit on bank CEOs. And mobile money payments dip in Rwanda after reintroduction of fees. Hello, welcome to the program. I'm Ladi Williams. First, let's take a look at what's happening in the market. Well, it's mostly negative sentiment on the African continent at intraday, except for Nigeria, where the NGX All-Share Index recorded a 0.07% gain at intraday. South Africa, the GSE fell by 0.23%, and Egypt's EGX 30 index dipped by 0.79%, while Kenya closed Friday's trading down by 0.55%. Meanwhile, in the Middle East, sentiments were mixed at intraday. Dubai index was the biggest gainer, adding more than 2.8%, while Abu Dhabi's index dropped by 0.90%. While within the region, the Qatari index rose by 0.12%, while Saudi Arabia's Tadawul slipped by 0.05%. And European markets were flat on Monday as investors searched for direction amid a steady drip of economic data and corporate earnings from around the world. Let's bring in Christy Platson. Okay, we don't have Christy right now. Let's move over to Asia, where shares in Asia Pacific were mixed today as investors react to the latest Chinese economic data for October. Mainland Chinese stocks closed lower, with the Shanghai Composite slipping 0.16% to 3,533 points, while the Shenzhen Component dipped 0.46% to 14,636 points. Hong Kong's Hang Seng Index sat little change to its final hour of trading. Elsewhere, South Korea's Kospi closed 1.03% higher at 2,999 points. Leading gains among the region's major markets as shares of chipmaker soared 4.23%. The Nikkei 225 in Japan rose 0.56% to close at 29,776 points, while shares of conglomerate SoftBank Group jumped 2.23%, and the Topix index gained 0.39%. And U.S. stocks futures were muted in early morning trading on Monday as the investors prepared to start the week after the S&P 500 broke a 5-week winning streak. Dow futures gained 102 points. S&P 500 futures rose about 10 points. And the Nasdaq 100 futures were up 38 points. Stocks are coming off a losing week after last month's consumer price index made its largest annual increase in more than 3 decades. The major averages snapped a 5-week winning streak. Investors will be focused on Tuesday's retail sales report and several major retailers' earnings this week. Walmart and Home Depot release results on Tuesday, and Target report on Wednesday. And crude oil prices skidded Monday under pressure from expectations of higher supplies and weakening demand. Brent crude futures fell 58 cents to $81.59 a barrel, while U.S. West Texas Intermediate crude futures lost 58 cents to $80.21 a barrel. Both benchmarks have dipped for the last 3 weeks, hit by a strengthening dollar and speculation that President Joe Biden's administration might release oil from the U.S. Strategic Petroleum Reserve to cool prices. And gold prices eased today, pulling back from a more than 5-month peak hit in the last session as a firm dollar dimmed its appeal. Spot gold fell 0.3% to $1,857 per ounce, while U.S. gold futures dropped 0.4% to $1,860 per ounce. The dollar index hovered close to a 16-month high, pressuring the bullion by increasing its cost to buyers holding other currencies. Gold has benefited from easy monetary policy introduced to spur economic growth during the COVID-19 pandemic. But any hike in interest rates should reduce the non-interest-bearing metals appeal as it raises its opportunity costs. To other metals now, spot silver fell 1.1% to $25 per ounce. Platinum dropped 0.6% to $1,075, and palladium was down 0.9% to $2,088. And the second edition of the Intra-Africa Trade Fairs kicked off in Durban, South Africa, with several African leaders, including Nigeria's President Muhammadu Buhari, in attendance. The event is hosted by the African Export-Import Bank and the government of South Africa, with the theme focusing on newly launched African Continental Free Trade Area. After the 7-day event, more than 1,000 exhibitors from across Africa will showcase their goods and services. Over 5,000 visitors are expected to attend. And Tanzania's central bank has placed a 10-year limit on the tenure of chief executive officers of banks and banned elected officials from serving on the boards of financial institutions. CEOs and board members of banks will need to stand down for 3 years after completing a decade in office before they can be reappointed. The aim of the new rules is to promote and maintain public confidence in banks and financial institutions by improving corporate governance. Banks will also be prohibited from offering commercial loans to employees on term for more favorable than those available to other regular borrowers. Tanzania has tightened regulatory oversight of banks in recent years in an attempt to safeguard stability of its financial services sector. Meanwhile, volumes and values of mobile money merchant payments have dropped significantly. Of COVID-19 transition. The statistics further shows the number of merchants dropped from over 25,000 in August to 22,297 in October, and the drop was attributed to the reintroduction of fees. And Rwanda has retained the key central bank repo rate unchanged at 4.5% to further support lending to the economy. After the quarterly Monetary Policy Committee meeting, Governor of the National Bank of Rwanda said the continued recovery of Rwanda's economy is supported by sizable fiscal and monetary policy measures and continued vaccine rollout. The country expects a strong economic rebound this year after suffering a contraction that led to the first recession in over 2 decades, blamed on the pandemic. Real GDP is projected to get above 6% in 2021, buoyed by vaccinations that allowed the gradual reopening of the economy. Real GDP growth contracted by about 3.4% in 2020. Nearly 20 Kenya-based companies have been blacklisted by the World Bank and the African Development Bank less than 2 years over fraud and quality concerns in projects funded by the multilateral lenders. World Bank, an investigation conducted by its corruption-fighting unit, had established that these firms had engaged in fraudulent practices during a bank-funded project in Somalia. According to the facts of the case, these firms recklessly omitted the disclosure of a conflict of interest relationship when submitting a proposal for a contract under the project, which is a fraudulent practice. All right, over to Frankfurt now. European markets were flat today as investors search for direction amid a steady drop of economic data and corporate earnings from around the world. Let's bring in Christy Platzen right there live in Frankfurt. Great to have you, Christy. Well, Austria has put its unvaccinated population under lockdown, and Germany may follow suit, both countries struggling to actually contain the COVID-19 infections. What effect would this have, this selective lockdown have on the economy?
Yeah, great question. So to go into a little more detail about what they're planning in Austria, we're actually going to be seeing police officers checking on different public settings there, asking people there to prove that they're vaccinated or recovered from COVID-19. If they're found to not be either of those things, then individuals will face fines of, I believe, up to 500 euros, and any businesses serving them who failed to confirm this beforehand as well could face much higher fines as well. And so, yes, as you said, Germany is considering introducing similar measures themselves. The current measures in place will expire at the end of this month, so that's something currently being considered. Now, of course, we have to remember that these two countries, along with many countries around the globe, if not all, are still in the midst of a recovery from the COVID-19 pandemic, which, after lockdowns such as this, but on a larger scale, brought economies to a halt. So we did see from one Austrian trade association saying that this selective lockdown could be a major economic hit to that country. But at the same time, we're seeing politicians there from across the political spectrum uniting, for the most part, behind these new measures. And this is because the winter season is a major economic season for Austria, of course, because of skiing and winter holidays. So this is something that they really don't want to lose out on. So this is another major economic aspect as well.
Right, and investors will be watching for the latest Eurozone inflation data out later this week, as they wait to see if the rising cost of consumer goods will push central banks to actually raise interest rates earlier than expected. Well, ahead of that, how are the markets reacting today?
Right. Well, you can see behind me a bit that we're seeing a lot of optimism, or I should say modest optimism, ahead of these numbers. And this is for a few reasons. We saw strong market figures at the close on Friday, and so markets are also reacting to that. Yeah, we are still seeing, despite these inflation fears, quite a healthy economic activity, particularly when in the consumer area. So yeah, this is something that investors are going to be watching out. They'll be interested to hear what's going to happen with interest rates. But basically, we'll be watching for these inflation figures to see if central bankers, for example, like the European Central Bank here, will be choosing to increase interest rates sooner than they'd initially said. But today, investors seem optimistic. This could also have to do with the fact that U.S. President Joe Biden will be meeting with his counterpart in China today to discuss the trade situation there as well. They've had months of ongoing talks that haven't really gone anywhere yet, but investors seem to be positive about it today.
Just hoping that chart behind you isn't a double top right there. Well, anyway, annual Dubai Airshow kicked off in the United Arab Emirates yesterday. German aerospace giant Airbus is, of course, attending that. Can we expect any news from them?
Yeah, well, we've already actually had some news from Airbus this week. The trade show kicked off yesterday, and we've heard that Airbus has announced its first mega deal since the pandemic began. So this is already hugely positive news for that company, and also for the airline industry in general. They announced that they had struck a deal for over 1,100 new jets with American airline investor company Indigo. So this is a really huge deal, considering the state of the aerospace industry over the last 2 years since the pandemic hit. Of course, air travel came to a near halt for some time due to the lockdowns in various countries around the world. Things have picked up, but air travel is certainly not where airliners would like it yet. But that being said, there is a lot of pent-up demand for travel, and I think that at this conference this week, we will be seeing a lot of optimism about what's going to happen in 2022. Traditionally, we hear a lot about a lot of major industry deals this week. So we'll certainly be watching closely and letting you know what else we hear.
All right, we'll be waiting for that. Christy Platson right there live in Frankfurt. Thank you so much, Christy.
Thanks.
All right, after the break, a recent report shows Nigeria got a larger chunk of fintech investments in Africa in 2020. We'll get details after the break. Do stay with us. back. You're still watching Business Incorporated live on Channels Television. Well, fintech startups operating across several sectors in Nigeria raised an estimated $248.6 million, an equivalent of 102.77 billion, and are in funding in the third quarter of 2021. And this represents an increase of about 103% compared to 122.76 million raised in the second quarter of the year. Well, a report from Telema Research shows in 2020, Nigerian startups attracted over half of the $160 million total fintech venture capital funding in Africa, making Nigeria investors' most preferred destination. Well, to tell us more about this report is Rahul Shah, head of financial sector, including fintech research at Telema. Great to have you on the program.
My pleasure.
So from your report, it shows that Nigeria attracted over half of the $160 million total fintech venture capital funding in 2020. What do you think drove this?
So I think we shouldn't be too surprised by Nigeria attracting the biggest chunk of investment in Africa. It is the biggest economy. It is the most populous nation. What I think is interesting is that VCs are looking at the country in a very different way from traditional mainstream investors. If you look at the Nigerian equity market, for example, the valuations are quite depressed in a global context. And that tells us that the investors in listed equities are, I would say, more worried about risks and uncertainty, whether it's exchange rates, the security situation, production bottlenecks, lack of investment. These are probably some of the issues that those investors are thinking about. VCs have those issues in mind, but they have a much longer time horizon. You're talking 10 years plus. And so for them, a lot of these issues are just short-term noise. And what they see instead, as I say, is the largest economy, the biggest population, a huge number of opportunities that technology allied with the ingenuity of Nigerian people can solve a lot of the problems that exist today. And so that's what they're looking at. And if we look at where they're investing, the bulk of that investment is going into the fintech sector. So financial inclusion is a key theme that they're playing. And, in Nigeria, there are probably 70 million adults that are financially excluded in some way. If you're not in formal employment, you're not getting a regular monthly paycheck, a lot of banks don't want to know you. And unfortunately, for most Nigerians, that kind of job, that kind of employment is not available to them. So basically, you have 70 million people whose basic financial needs aren't being met. You have innovative companies bringing new ideas, new solutions to the table. Not all of them will succeed, but some will, and those that do will be very valuable. And that's what VCs are looking at the moment.
All right, given this, chunk of investment, how are some of these, fintech startups, how are they faring right now?
Well, you're seeing a lot of fresh money coming into these fintechs. And what we've seen from the experience elsewhere is it's not enough just to have a great idea, but you need money backing that idea because you need to educate the customers and show them that the product that you have is in their best interests. And what we've seen, one of the issues in most emerging markets is the lack of financial education. So basic concepts like risk diversification or compound interest, those are some of the concepts that you need your customer to understand if you want to sell them financial products. And so a lot of the fintechs are having to spend money on education rather than purely on marketing or producing the service that they're actually offering. Okay. And so to come back to your question, I think it's hugely important that the fintechs are attracting money because that is a key piece of the jigsaw in terms of fintechs actually succeeding and bringing finance to the masses in Nigeria.
All right. So what do you think, are the main factors for success that, Nigerian fintech startups should actually, keep in mind?
Yeah. So we actually, we mapped around 250 fintechs across Nigeria. And we've done a similar exercise in other markets. So we think we've got a good handle on, what fintechs need to achieve to succeed. And I think in Nigeria, there are three things. Firstly, building strategic partnerships. If you try and do everything yourself, it can take time, and in that time, in an industry that's fast-moving like the fintech sector, you can get left behind. So I think building strategic partnerships can help you get a big customer base. It can also add products to your suite, and it can also bring expertise that would be difficult to achieve. So, payments is, I'd say, the hottest sector in fintech in Nigeria at the moment. And you've seen, Flutterwave partner with PayPal. You have Paga partnering with Visa. These are relationships that help improve your credibility with the customer. If Visa is partnering with you, then you're not some fly-by-night operator. But it also brings a lot of expertise to the table, and I think that's helpful. So that's the first thing. I think the second thing is basically you need a high-quality product. Now that's a pretty broad term, but basically, speed of execution, reliability, a product that's has some innovative features that bring something to the table. These are things that that you need as well, because repeat custom is basically the key to generating value for fintechs. And then thirdly, a point that I sort of touched on before, but I think in Nigeria, it's very important to target the financially excluded. There are more excluded individuals than there are financially included individuals. So it's a huge market. There's limited competition in that space. So if you can provide a solution to these people, then you can you can generate a lot of customer loyalty, and that will pay off in the long term. And some of the unicorns in Nigeria, such as OPay, have been very vocal about their work in terms of trying to improve financial inclusion in the country. And I think that's
right.
So those are the three things that I'd highlight at the moment.
Okay. Well, Nigerian fintechs are clearly, growing fast. But what do you think is holding them back from actually doing better?
Yeah. So we're seeing some great growth numbers from some of these fintechs, but life is not easy, and hats off to them for good execution. But I think the first factor that I'd highlight again is the poor financial literacy. It's not unique to Nigeria, but we see this in many emerging markets where the mass market is not that well versed in key financial concepts. So a lot of these. So obviously that's not an easy thing to change overnight, but I think fintechs are helping by educating their customers and making them aware of key financial concepts. So I think that's one thing that's holding them back. I think another factor is a lack of trust. So as a startup, you're probably not going to be well known to the mass market, and also typically people are very conservative when it comes to their own money, and quite rightly so. You put those two factors together, and there's a huge barrier of trust that needs to be overcome. And as I say, partnerships can be one way of scaling that barrier. But money also helps in terms of advertising and marketing your products as well. I think another factor is fraud. We've seen in Nigeria and other markets that the incidence of cybercrime has risen significantly over the last few years. And that doesn't help when your basic product is a digital product. And so I think, the authorities are working to deal with this, but obviously cyber criminals are, typically 1 or 2 steps ahead of the game, and that's why those numbers are growing so rapidly. Right. And then finally, red tape. I think it makes sense to have red tape. There's a lot of personal data that fintechs can capture, but there are ways of protecting that data that don't need to be so cumbersome, and I think that's an area that regulators should look at.
All right, Raul, we'll keep tracking that space to see how Africa grows when it comes to fintech, Nigeria and Africa. Well, Raul Shah, Head of Finance Sector Research at Telema, thank you so much for coming on the program. Enjoy the rest of your day.
Thank you so much.
All right, and that's it on Business Incorporated today. Thank you so much for watching. See you tomorrow. Bye for now. I'm Ladi Williams.